You take me so high, you take me so high, you take me so. You take me so high, you take me so high, you take me so. You got me up all night. You got me up all night. Oh, you got me far from the 9 to 5. You got me living a new kind of life. You take me so high, you take me so high, you take me so. You take me so high, you take me so high, you take me so. You got me up all night. You got me up all night. Oh, you got me far from the 9 to 5. You got me living a new kind of life. You take me so high, you take me so high, you take me so. You take me so high, you take me so high, you take me so. You got me up all night. You got me up all night. Oh, you got me far from the 9 to 5. You got me living a new kind of life. take me so high, you take me so high, you take me so. You take me so high, you take me so high, you take me so. You got me up all night. You got me up all night. Oh, you got me far from the 9 to 5. You got me living a new kind of life.
All right. What's good, everybody? How we feeling today? You know what? It is a good ass day. Great day to be alive here. All right, we're gonna dive into a couple things, and you know what I want to do with you guys today. I wanna just vibe it out. I got some charts that we can go over. Let's see here. You should be able to see my camera and my screen now. Let me make sure that it's visible on your end. All right, we are good to go over here. Okay. All right. Let's see. It looks like the screen, camera, and audio. It's good. Beautiful. This is what I love. Okay, so this is actually my third stream of the day. English and Spanish during New York session. And then, you know, we got the one for the squad, for the community here on YouTube. So good stuff. Bavik, what's good, my brother? Yo, shout out to boy Bavik. This boy doing work. He is making funded accounts. I mean, guys, if you see a funded account go out of business, it's probably Bavik's fault. So, what's up, Bay Area? What's good, guys? How's it going? Let's go. Double OT. Let me see if I got this going here. Okay, this looks... All right, cool. So, first, before I pull up the charts, let me just say what up to y'all. It's good to be here. I think we were together last week as well. And it was a busy week. You know, we had so many workshops all over the U.S. It was so cool. We had over 500 people throughout 5 or 6 different cities. So shout out to everyone that I got to see in Chicago, in San Antonio, Dallas, Phoenix, Cali, Seattle, Washington. So, you know, you guys were awesome. Had some amazing conversations. For those of you that were staying at the, you know, kind of like the masterminds, the private masterminds afterwards. I know some of you stayed at, you know, these Airbnbs with us and stuff. So it was just cool seeing everyone's progression. You know, we hosted a workshop last year. I think it was around September. So got to see the jump in progression with a lot of you as well. So it's cool. It's cool to see people just continuing their journey, continuing their process. I feel like I don't really believe people fail for the most part. I think just people just quit. And so for those of you that are fighting the good fight, you know, developing the different aspects that are required for a trader, guys, like, just don't quit and consciously make improvements. You know, ask for feedback, talk to people that know more, that have walked the path that you're walking. But yeah, shout out to you guys, and I wanted to give a shout out again to everyone here that's plugging in week after week, and shout out to Bavik, because you had your ups and downs, bro, through the process, and you're getting to reap the rewards due to your tenacity, your discipline, and everything you're doing, bro. So good stuff. I see we got Edgar in here. Angelica, what's up, sis? Dylan, bro, what time is it out there? It's like 3 a.m. in Spain. So so yeah, hey, shout out for y'all. 3 a.m. plugging in. I know we got some people here from Africa that show up, from Europe, Asia, and biggest takeaway: what would a professional trader do? You really gotta. A lot of this does help, just understanding from what identity you're coming from. So good stuff, man. Philly's in here. I see we got Devin in the house, Washington, Michael Schomburg. 3rd session of the day. That boy don't miss. And all of this, guys, I mean, your efforts do not go wasted. Memphis, Barbados. I love it. New York City in the house. Park City in the house. ¿Qué tal, chicos, mi gente? Los que están aquí, que en español es su primer lenguaje, tengo una sesión de ayer que los pueden ver. So, yeah, good stuff, guys. And, let your communities know that you're dialed in, that you're plugged in. And, yeah, we're going to dive into a couple things here. I want to talk a little bit about last week as well, from a mindset perspective. Now, and then I'll dive into the charts here in a second. So we will be going over dollar news specifically, a lot of US dollar stuff, indices as well, and a little bit of crypto and stocks. So it's going to be, and gold, of course, and silver. Yeah, so we're going to be looking at everything, basically. We'll be just diving into the whole fucking market. But last week, and I want to talk about this because I do think a lot of people make this mistake, which is, man, how do I, so, okay, so hear me out. You ever had a losing start to your week? So you start trading, you lose your first trade, you lose your second trade, you lose your third trade. Something like that. Maybe more, maybe less. So what's that natural emotion that comes from that moment? What happens? What happens? You start to get discouraged. Maybe you start to lose a little bit of faith in your skill set. Maybe you're thinking, did I just forget how to trade? What's going on? Markets, unlucky, a victim mindset. But what tends to happen to people is that they stop doing what they were doing. Like, you're scared to keep trading. Exactly. And so last week, for those of you that plug into the live sessions, we started off 0 for 3. Like, I started off 0 for 3. I think it was Monday, Tuesday. And then all of a sudden it's like, oh man, like, yeah, I'll just do this next week. I'll look at this some other time. But I'm grateful that I've been trading for going, this is like my 9th year in the game. And one of the biggest things that have helped me in my journey has been to evaluate the losses. So, okay, if I'm losing based on my system, then that's fine. Like, I'm supposed to lose. Sometimes I'm supposed to win. So, one, continuing to trade because I'm trading according to my system, which is fine. And here's what happens, guys. And this is also perspective with signals or ideas on, why people make mistakes and why is it that copying other people is an imperfect process. Because here's what can happen, and here is what happens. I went 0 for 3, which is start. Okay. The 4th trade, GBP USD. Boom. Full risk reward. So I'm 1 for 4, but I'm actually up 1 risk reward. Okay. Now, for those of you that maybe, you're plugging into ideas, you're on people's sessions and things like that, you watch people, maybe you're in a community, you have a mentorship, whatever. Then you're like, oh man, that last trade just won. Okay, hold on. Let me get back in the groove. Let's do it. So here's what happens. I'm 1 for 4, but I'm up 1 risk reward. 5th trade comes. I lose it. So now I'm 1 for 5. Break even. And then what happened though? People didn't take the winner, they took the loser. So you are down 4R and I'm at break even. And you're like, all right, you know what, man, I'm just done. I'm done with this trading. I'm not doing nothing. Thursday, 0 trades. So it's Friday. Friday, first trade, USD CHF, break even. Second trade, NZD USD, take profit, plus 3.75R. Fourth trade, USD CHF, goes up like 1.5R, and I end up break even by Sunday. But the last trade of the day, the third trade of the day, US 30, plus 6R. So in reality, I took 8 trades. I started off 0 for 3. I ended up 4 for 8. And we ended up getting like well over 9 RR. So the point of my breakdown right now is, one, you don't know in what sequence the winners are going to come. They can happen, every other trade. You can lose 3 in a row, win 3 in a row. It's just going to be a mix. You just do not know. But what you do know is this a valid setup? Am I risking properly? Am I managing my trade properly? And am I exiting the way I'm supposed to? So do not hesitate to take a trade that exactly fits what you're supposed to be doing. Just because you lost a few in a row, that doesn't mean you're bad. Doesn't mean that suddenly you forgot how to trade. It just didn't work out for you. And maybe there's little things that you can tweak, but if they're not emotional losses and they're just technical losses, carry on, my friend. Continue. And that's why I personally, I don't limit my trading as long as the losses are quality losses. Because remember, guys, the losses are part of the expectancy. You're going to lose. You're going to. Just like you're going to win. So just let them happen. All right, let those trades happen, guys. You'll feel much better later. So hopefully that just gives you a little bit of perspective to keep on trading. Keep on trading. Don't trade to make money right away. Don't trade to force anything. But definitely trade because you've built evidence, you've built a system, you built a strategy that has a positive expectancy. You know what I mean? So, cool. All right, guys. So it looks like y'all are diving in here. Y'all want to see some charts, or should we just talk about mindset all day? So let's dive into some charts, yeah? Now, today was pretty interesting. We got a little bit of movement right off the rip. I would say that I wouldn't say I got lucky, but I did execute at an unusual time with US 30, so I was able to catch quite a bit of this drop here. A pretty fat setup, if I say so myself. So I'm gonna kick things off with indices. I think sometimes this is my bread and butter. 75% of my trades are indices. Unfortunately, I'm not live on YouTube to trade indices every morning since I'm doing that with the community members. But either way, I want to give you guys some of my overall big picture perspective, and then maybe we do have some ideas that we can plug into here, and maybe I can help you guys get set up for some intraday stuff. The way I approach indices, though, the correlation between the three really do matter. And sometimes it comes down to literally the price action during New York Open or right around that area to decide which indice is it going to be. Is it going to be US 30? Is it going to be NASDAQ? So, sometimes it's a little trickier to position you guys from a overall bigger perspective. But if you were on the Spanish session yesterday, I do a Spanish YouTube live as well. I did talk about how I expected indices to fill this imbalance, whether it's US 30, NAS, or S&P. I literally said, like, guys, I expect us to work our way down relatively quickly, but then to continue to rally upwards, which is exactly what we got. So if you're bilingual, if you also understand Spanish, you can go check out yesterday's stream as well, which I think, played out quite nicely. But so yesterday I did take a later entry, and during Asian session, I noticed that price came into this zone right here. So between US 30, S&P, and NAS, price popped up, filled this imbalance, and then started to work its way down. So when I saw us back in this institutional buy zone, I'm like, okay, this could be a valid sell, but let's compare price action to NASDAQ, S&P, where's price at there? And, the market was consolidating over here. It was already playing off of structure. So I felt good about reversals in the zone. And then S&P also was playing off of this kind of big zone as well. So both were valid sells in my opinion. I just prefer trading US 30. I feel like S&P a lot of times is kind of stuck in between NASDAQ and US 30. It's like the middle child of the indices. So I usually don't end up choosing S&P for trades anyways. And considering how much imbalance we had down here, I felt pretty good about taking my setup. So so I ended up selling US 30 here. So we not only did we catch the buys down here on Friday, in which I walked you guys through, and I'll give you guys some perspective on. This is a nice trick so that you can understand, okay, when can I extend my take profit a bit further? Because I know you don't need massive risk reward to be profitable. You don't at all. There are a lot of traders, 2 risk reward, profitable. Tons of traders. How you exit the market is what matters, guys. Like, your entries, they allow your risk to reward to be better or worse, but your exits are what pay you. And especially if you guys trade similar to me, let's say you have like a smart money perspective, if you look at the markets based off of kind of narrative, and you're getting really precise entries, if you feel like you're not making enough or you're not where you're at, maybe, wild idea, but maybe it's not your entries. Maybe it's your exits. So I just recommend, challenge the way you exit the market. Maybe you have to go for a shorter risk to reward, but you're actually hitting take profit more frequently. So something to consider, right? But in this example, I don't want to talk too much about smaller risk rewards. I actually want to give you guys perspective on when to let your risk to reward run, because that's one of the things you guys have probably heard before. It's like, have your losers be small and calculated and let your winners run. Now, I don't believe that all winners are going to run. Some of your winners are going to be rather conservative. 2 risk reward, cool, still great. But some have a lot of room to expand on. And what I want to walk you guys through here is this. You see how we have some squeezing, sideways movement, and it was Wednesday, Thursday, going into Friday. So indices don't usually move sideways like this for super long, but we saw it happen here. I actually have 2 examples for you. One, you see this is a buildup from Thursday of May 23rd, move sideways all of Thursday, all of Friday, into Monday, and building up into Tuesday. Guys, almost 5 days worth of consolidation. Is there any surprise that the market then decides to tank and fall off over 1,000 points? No, that shouldn't be shocking to you. Why? Because the longer the market squeezes, the bigger the breakout. the bigger the move. So here, similar situation, we see the market consolidating, moving sideways for just about 2 days. So what happens when we finally start to get more data, when we start to see the market actually, create higher highs, start accumulating and go through its motion, then guess what? We actually got ideas in here. So I took this buy post New York Open. We had a market clear liquidity here on smaller time frames. You kind of have to be more in there. So you see a big spike down, we get a higher high, market pulls back, mitigates the sell-off, and from here it's gone. But not only did it respond off of this, where the market sold aggressively, but then it squeezed again for 2 more hours. So once I saw us moving sideways for 2 hours on a Friday, and this is the monthly candle close, I'm like, all right, this market's moving sideways quite a bit. It's the last day of the month. Leave it to these orchestrated markets to then just absolutely pump the fuck out of this market. This shit just went crazy. Just like, what the actual, like, look, I mean, bruh, talking about 600, 700 points in a matter of hours. Now, I got out here a little shy of a 6R, but damn, 15R? Sheesh. I mean, so again, there are instances that you have information. It's not like, oh, let me just take this trade super far. No, it's not a matter of hope. It's that it's showing you, and the example I love to give is just think about a pressure, right? If you build up enough pressure in a concealed space, like a water bottle, right? You twist it. There's all this air pressure building up. Eventually, there's so much pressure in there that it pops. Same thing happens to the market. Buyers, sellers, pressure, boom. So something to keep in mind, guys, as you approach the markets. I do think a 2R, 3R is honestly probably more than enough. But every once in a while, if the market gives you the right conditions, you can allow yourself to extend your risk to reward a bit better. But with all of that being said, let's dive in and let's see if there's any opportunity, moving forward with US 30 or with NASDAQ or with these indices, and if there's something we can look at. So here's my bigger picture perspective at the moment with US 30. Now, I believe we're going to have a very bullish month. Now, monthly, we had April candle, super bearish. This thing just dies just to come all the way back up and then come down again. So the weekly actually looks, I think, a bit more, you get a bit more detail on how the month went. So we have big moves to the upside going up to like the middle of May. Then as we make all-time highs once again, I mean, if you just made all-time high with US 30, wouldn't you want to just tank the market over 5% to scare retail? I mean, it makes sense to me. So we see this tank and go down aggressively. And then, of course, Friday, it fills these weekly imbalances. The market goes back to price that was we were trading at here in late April, and then immediately recovers. So it was just for such a short period of time is price sitting down here. So I don't believe we're going to have a bearish month. In my opinion, price came down not to make lower lows, not to shift structure, but to fill imbalances, to kind of recalibrate the market and then move on again. So in my opinion, I do think US 30 on these higher time frames wants to go bullish. And on top of that, if we take a look at, again, here's the weekly on US 30. Every time price drops into below 38,500, it's so brief. Like, price just doesn't like trading below these levels, not for an extended period of time. So we're seeing it happen again. I don't think we stay down here very often. I do think we're going to come back, fill some fill some of this imbalance up here, and I wouldn't be shocked if we go and crack 40,000 again. So, and if you look at, now take a look at this, right? Let's look at NAS. NAS, same thing, all-time highs. You see, you know, last week tries to start to work its way down just to come right back up again. And then if you look at S&P 500, similar situations. We're near all-time highs still, right? Near these May all-time highs. Price is still moving relatively well. And every time this market drops, it comes right back up. So, cool. Bullish market, understood. Now, when we dive into the daily time frame, what's up, Musa? When we dive into the daily time frame here, guess what happens, guys? Again, market comes down, doesn't want to be down here very often, comes right back up. Even though today it tanked, it came and closed above here one more time. So I do think the overall momentum here is not for the bears. It looks like it's more so for the bulls. So when price goes down here, we work our way higher. Now, one thing I want you guys to understand, and you know, we'll get to entries and things like that soon, is what do we look for in the market, right? We're looking for retail money and the quote-unquote smart money. And now, more or less, this is how I've been looking at the markets the last 6 years. And basically, we see the market fill imbalance and get to a previous structure point. So clean fill of imbalance on US 30. But now we want to see, is there a place where big money comes in just to liquidate retail for then the price to come back up? Now, when I look at US 30, yes, the market definitely worked its way down, and I ended up taking profit over here mainly, and then a little bit more, a smaller amount down here. But here's where I see the bigger drop, right? So we see the market drop here, work its way down just to rally. Now, if I look at NASDAQ and US 30, to me, I mean, same thing. NAS comes crashing down, comes right back up, and keeps pumping. So in my opinion, it looks like NASDAQ is trading a bit more bullish relative to US 30. Same thing if you look at S&P. S&P and NAS are basically identical. And then you have US 30 that's pretty similar. It's just a little bit slower on the way up. So I want to take a trade because I think buys are in motion. If you look at the way the markets are structured, you know, NAS gave us some higher highs up here. Even though it came crashing down, it pulled right back up. S&P, very much so higher highs. And then again, this also came crashing down, but then came right back up. So as we look at something like this, I think we have a good chance at some pretty decent buy setups here. So let's look at which one of these could have a better performance or which one just makes a bit more sense. Now, let's say that NAS just, here's where you see a lot of money come in and push the market downwards. So you see it happen right there. And from here, you know, this is our buy zone. So in this area, I would love buys. Now, I want to ask you guys. So you guys let me know in the chat. Where in this zone do buys make more sense? Where we have this structure. It kind of looks like liquidity to me. In this imbalance, could we have another opportunity in here? Maybe it's even lower. Could it go lower? What do you guys think? Or we also have S&P 500, where here, again, the market aggressively moves its way down right into this imbalance fill, right into this structure. So this thing, you know, cracks these lows where there was kind of like support building up in this area very briefly. And then it makes a higher high. So same thing. Could S&P, you know, where is it that this could play off? What could happen in here? And so I do think we can get into some of these imbalances. So whether it's S&P, whether it's NAS, but it does look to me like we can get a drop into this area and then a continuation. So something like this, I think could work with S&P. Similar situation here with Nas. I'm not sure which one of these two will be the one that really decides it all. But with indices, this is what just looks like it would make more sense at the moment. Obviously, US 30 is kind of similar, except it's just not as bullish in the structure overall. However, the market does slow down right there, lures buyers in, then rips it one more time before the market then completely goes bullish again. So what's something I would be doing? I mean, guys, I would want to play off of whichever one of these guys is slower to get into our key zone. And especially in this imbalance. Like, I think these imbalances give us a nice area for reversals for sure before the market can come back up and maybe even drop off again. So something like this looks very good to me. I just don't know which one it's going to be yet. When the time comes, then yeah, I mean, we'll know. But for now, we have to wait for price action. So between these, Nas, S&P, and US 30, it's just going to come down to how price works its way into the zone and how everything comes along. So be patient here. Now, one other thing I do want to show you guys is we did see a decent pump up here before everything started to tank. We got a little pullback here that plays off of previous levels of resistance. Not quite the mitigation, but it's moving pretty decent enough. So tomorrow, guys, New York session, I would say you're probably seeing some movement. However, we also have these JOLTS job openings, which is 30 minutes after New York session. The market may have a little bit of fun during this session. This is not usually the biggest pump or drop in the world. So I wouldn't get too excited. But you never know. Any excuse is a good excuse for the markets to move. So for now, guys, I would say let's focus. Let's see which one of these are going to give us good opportunities. It could be US 30, it could be Nas, it can be S&P. So what I'll do here is I'll share each one with you guys. And yeah, I appreciate you guys. It seems like you guys are sharing the YouTube. And then I have a question for you guys. How did you all find my channel? Was it through someone that's already trading? Are you already a member in our community? Did you just stumble across a random ass trading live stream and you're just like, well, let's see what this guy's fucking talking about? Yeah, so y'all let me know. Through I am. Okay, cool. Awesome. So, okay. Those are indices. Again, wait for those. I asked for a go and the lights. Yo, you're wildin'. The lights led me to you. Y'all are funny. I am, and I shared it. I appreciate that. Cool. All right, so that's indices. Let's switch it up a little bit. Neri here asked for oil. So let's dive into that. Crypto. ETH just did a nice little liquidity capture. Hold on, this is interesting. So ETH just swept up a little bit of money here. Retail buys just got clapped with the push like this. That's a nice little push. Almost 1% drop. If ETH comes and gives us some higher highs, we might be in business. Crypto, though, a lot of liquidity. It's a lot of squeezing. I'm about to get to oil, but one thing I am seeing that's interesting here with crypto is we're kind of squeezing quite a bit. I wouldn't be shocked if we get a really aggressive drop before we just rip up again. So Interesting. Yeah. I was a part of Academy in the beginning of my journey. Awesome. Welcome, Zainab Newson. Love to see it. Rocking solo trading once I learned. Awesome. Congrats, Victor. Glad you're doing well and just here for the vibes. Yeah, I'll go over gold. I'll go over gold and silver. Actually, I like silver a little bit better. GU. I'll dive into GU. Yeah. All right, so that's weird. I thought oil. Oh, that's right. I rearranged this a little bit. Okay, so U.S. oil here. I do like zones here. So this is in an overall juicy area for me. I like my U.S. oil buys in this zone where we're at right now. So yeah, I like this entries, whether it's right over here, whether it's lower. Either way, overall in this area, I like buys. I think we had a massive push to the downside, which took care of quite a bit of retail buys in January and in February before the market started to absolutely rip to the upside. So there's a couple of things here. We'll do a quick rundown through this, but the weekly time frame is very bullish with oil. We saw price get up to 95 before we started to settle down again. And then when price did come down, oil just does not like to stay under 71. And so chopped up in there for quite a few weeks before the market started to rally. And then now getting into the daily time frame here, and you guys kind of seeing the last low that we had, this last swing low from February. We saw a nice pump, about 2 months worth of bullish price action, exactly 2 months worth of bullish price action before we've been getting our our retracement here. And the market has been retracing here for, again, another 60 days to a T. That seems a little unusual. I don't know if these are just perfect 60-day cycles. Maybe it's just a coincidence, but something worth testing, I guess. But it is mirroring really well. And so I like the ideas. I like buy ideas in the zone. I took a swing at this, and I think we can carry on from here. If you want to get a better risk to reward, I do think entries like basically where we're at now make a lot of sense. The risk to reward would be a bit better as well, because I do see this going the long run too. So if we're looking at this on a weekly level, the fact that we had about a 786, 886 retracement on the weekly, that usually takes our setup. Any pullbacks that we get between, especially when the market closes above these fib levels, our extensions go a bit further. So you see how, yes, we played under this 886, but price really closed above 786. Usually we'll see a 786 to 27.2 minimum. But we traded between 886, 786. So for us to get in this zone makes sense. And then we also have that iconic 100 price level. So seeing price basically go from quarter level to quarter level, I think is definitely likely for this to go down. You got those psychological levels supporting price action as well. So seeing that go down, it makes sense. This could be something that, 9.6 risk reward, that's fantastic. However, I do want to add, a move like this to the upside that strong, this could take a few months. This could take 3 months. So, you want to be mindful of the swap fee. How much is the market charging you to have a trade open every day? If they are, sometimes you don't get a charge. Sometimes you get paid to hold the trade over into a new day. So it just depends, which is cool. We love to see that. Now, if you don't want to hold for that long, or if you want a better risk to reward and just a tighter entry, the next target, the next zone that I think makes sense is right around 80.55, where we have equal highs. So there is definitely retail sellers here. So that could be another good target. Obviously, risk to reward is going to be a bit different in that situation. But if you're like, hey, I don't want to trade off of these higher time frames, I want a better risk to reward, or I'm just patient, then you could wait for the market to possibly give you the setup. So you don't know, we don't know for sure that, you know, oil is gonna give us a, you know, a move, and then all of a sudden we get a liquidity capture, you know, a higher high, the market trades bullish, and then all of a sudden it pulls back, and then we get the pump. Like, we don't know all of these things are going to happen. It's impossible to know. So we trade within what we understand, what is in our control at the moment. So for example, let's say instead of entering at 74.15, you're entering right now at 73.60, then your risk to reward is going to be different, you know, and you can modify what your exit might be. You might just be an intraday trader, not just an intraday trader, but you just might be an intraday trader, and you don't need to take this all the way to, you know, way over here. You could take a smaller trade, and that's okay. So take your pick. Maybe you have a shift in momentum. Maybe you catch the quote-unquote falling knife. I love to trade like this. I'm trading the higher time frame entries, and I'm cool with that. If I get a smaller time frame opportunity, then I'll take that too. Dude, water's so good. You need nothing else, just water. So that's oil. U.S. oil. So I'll guess I'll give you guys my daily, because, I mean, yeah, you could wait for the signature setup, but you might be waiting for a minute there. Other than that, here, if you're looking to take a smaller time frame entry, then like I mentioned, I think these equal highs could work, whether it's 80.50, 87.50 as well, looks clean. And then if you want to go from fib to extension, then you're taking this to right around 90. And then I'll add on here swing target 100. Someone asked, why do I prefer, Neri asked, what I do is not that I prefer FX or FXCM or anything. I just adapt to market conditions. So for example, this morning I was looking at US oil, and TVC just like didn't do anything. It was just frozen. So it's been frozen. So you can see here, for example, data issue, no real-time data. Our engineers are already investigating the problem. So yeah, that's why in this situation I'm like, okay, it was lagging, and you don't want to make a mistake because you just have the wrong data. So what you can always do is just cross-reference what you're looking at. You know, US oil on CFDs. Here's like a forex.com, you know, feedback. See the market rip to the downside, come up. You can look at just different ones. You know, FXCM, Black Bull, whatever. So you can kind of get a different perspective through different mediums as well. So yeah, it's always good to just cross-reference things. So when I looked at TVC and I was like, oh, this is just not loading. Obviously, can't do that. So okay, there's US oil. Word. Now, what do you guys want? Metals or Forex? What's the vibe? Mexican peso, man. What a move. Natural gas. Big pump today. Metals, gold, gold. Everything. Everything, please. Okay. You know, we live in abundance, man. All right, so let's dive into it. Now, you know, we've seen, wow, the amount of alerts. The amount of alerts that I have right now is actually hilarious. So we saw silver, and I believe I shared this last week. Correct me if I'm wrong. Y'all can go back. I don't know. Anybody here just plug into my YouTube and not anything else, but just like you just shot for this one? Let me know. But I do believe that I talked about silver playing off of this imbalance and this structure and then moving on, right? As you guys know, I look at silver and gold side by side. These are, the best of pals. And I like their correlation. I think it makes such a big difference. So as we look at this here, I just get confused from like the community, the members, like set streams, and then the ones that I do on YouTube. So I kind of lose track sometimes. But I talked about how there was imbalance here and still liquidity left behind. And silver today did just exactly that, right? It ripped to the downside, filled the imbalance, played off a structure, and it did that in unison with gold, because gold also needed to push down further to fill imbalance and then rally. Now, with all that being said, that's not why I'm here today. Right? I'm not here to talk about that. I'm here to talk about the setups that I see here loading up for us. So peep this real quick. Okay, so here is silver on the right side and gold on the left side of the screen. Okay, now we have a lot going on here. So let me go ahead and just eliminate some of these things that are just not necessary at the moment. Okay, so gold's on the left, and we saw signature thoughts, right? Signature moves. We had liquidity building up here with gold, big pump to the upside. The market comes crashing down, and then it creates some support, a big push down before the market rallies to the upside. Cool. Now, naturally, this zone looks like it would be good sell zones. And I'm sure some of you are in sells right now. Some of you saw this and you're like, I'm going to sell this ish. It's a wrap. I'm making bread. I'm going to quit my job. This is the sell. Now, obviously, that's ridiculous. But why would I not sell this if it looks like a clean textbook setup? And the reason I don't is because of our boy Silver over here. Now, Silver, on the other hand, Silver's been chilling. Right? Silver's been chilling over here. And Silver just had a slower process. All right, Silver's like, hey, I'm not in a rush to get to the zone. I'm chilling. I'm big chilling up here. And so this is the sell zone for Silver. We had, again, similar situation. Silver pumps up, clears out retail sellers, and then works its way back down. Cool. As this works its way back down, you guys can see silver's just been a lot slower to work its way higher. So if silver is going to keep running to the upside here, if silver's going to keep pushing up, then that should drive gold up. And this is where gold now might break this high. And it's because silver, one, has imbalance to fill, which is a pretty likely thing for it to happen. And it still has to close out this massive buy position that's opened up here. So if that's the case, and I think that we're eventually going to get silver up to here before it drops down, then what could happen is we may get gold to keep pushing higher before it drops down. So that's why I just stay out of gold completely and allow silver to work its way higher. Now, what if it doesn't? What if it just starts crashing now and gold plays out? Cool. That's okay with me. I want to take the higher probability setup. And in my back testing, in my forward testing, and in my experience live trading these things, I prefer to wait for the lagging opportunity. the lagging asset and take that. Now, in here, it is a wider stop, so it might only rack up 2 RR on this trade. It'll just depend on how the rest of the market's looking. So we'll just see kind of how things unfold. But for the moment, I'm cool with the 2 RR. And especially since it's kind of lagging behind, it just kind of makes more sense. So I'm going to go ahead and I'm going to send out silver. Now, I do like the buy still on gold, though. So I kind of have 2 different ideas here regarding how the market's moving along. And so here we saw the market push down, make a higher high, and gold is just more bullish than silver. So I do think that we could get some pretty good movement in this area. And so I like the gold buys and silver sells. So I'm going to go ahead and share that with you guys now. And feel free to implement as you wish. So again, these are just my ideas, guys. I'm not here. I'm not a prophet. I just click things. Okay. Metals, done. Oil, done. Indices, done. Another one. Okay, so let's take a look at some majors and then we're done. Why? Well, guys, we have a fun week ahead of us. So, you know, we got CHF CPI news. So CHF is relatively boring, right? CHF is like actually really, really boring. Doesn't really do much. It just chills, man. It likes to chill out. You don't get a lot of volatility, not a lot of news events. But every once in a while, CHF likes to do its thing. And let's see what happens. The last move was May 2nd. So let's take a look. Let's see if CHF can give us anything, any presence this for this session. Maybe not. I'm not going to be up, I don't think. So I probably won't even trade anything here. But yeah, I mean, USD CHF has been tanking. We had some decent reversals off of our zone here. So we did see the market pump up and twice reflect off of these areas that we had on some of the higher time frame setups. So right now, I mean, CHF maybe tanks into lower levels here. You know, we had some massive moves to the downside. So maybe we get into the zone and the market plays off of this. Again, it's been very bearish. So the market has just given us lower low after lower low after lower low. So I do think it's worth mentioning here. What I don't love about something like this is there is no, I don't really see, at least here for sells, I don't see clear like institutional moves liquidating anything. It's just like, it's been trending, but there hasn't been those power moves or anything like that. So what I wanted to see is what happened during the last CPI news event for USD CHF, and that was May 2nd. So May 2nd, pretty big pump to the downside, not bad. Okay, and then before that was April 4th. So let's check out April 4th. April 4th here is this day right there. Looks like big pump up, wick back down. Okay, so March 4th. Where are we at? Big push down, closed above. So, I mean, yeah, we have relatively volatile days. We'll see what happens. Again, the thing that I'm seeing right now that could be doing something worthwhile is maybe we just have a quick push down into these levels before the market rallies again. I could definitely see something like this going down what we could do is come check out how price action was moving over here and see if there was any leftover positions and things like that. You guys can see here we saw a nice drop into this before the market just rallied. Textbook plays. I mean, liquidates buyers, mitigates, gone. And the drops start happening around here. So weird enough, it's like weird times. So yeah, I mean, the market comes down, pops right off. I mean, maybe we get reversals off of here. Obviously, there's other CHF setups that could have a better perspective. So let's see. Someone asked, are we able to see these ideas now on Go Social? I think a majority of them, yeah, I feel like actually all of these has sent out already. Actually, not the indices ones. I'll send those over on there here in a bit. Obviously, I can only do so much at one time. So, okay. I don't know if CPI is going to be that aggressive. I don't know if we're going to get all the way over to here. That would be a fat 100 pip drop. It's possible. I mean, we saw it happen on Wednesday or Thursday. Thursday had a huge drop. So, I mean, it could happen. But something like this, I could see play out. I'll have an alert set. But, I mean, I won't even be up for this. So I'm not really tripping too much. But that's CHF in general. You know, we have more of this. And the only reason I'm going over this is because we have news on this, CPI news specifically here in a few hours. So, I mean, outside of this, CHF, odd CHF, arguably one of the choppiest, ugliest pairs that exist. Just not my cup of tea. So, okay, I mean, you know what? Maybe I take it back. No, I'm good. So we do see a little sweep to the highs, and the market works its way down. But you see how price comes down very quickly, comes right back up. This, to me, not my favorite. Doesn't confirm lower lows. This, to me, looks like it liquidates buyers just to come back up. So indecisive there. CAD CHF, yes, is bearish, but a lot of liquidity. A lot of liquidity right here. Good chance that it gets above that. Maybe it trades up here. You have CHF JPY, nothing there. Euro CHF, big pumps to the upside, and then the market quickly comes back down. So we may get some reversals off this zone. Same thing you see here. Big ups to the big moves up. Market comes back down. But I just don't like CHF price action. This just looks so ugly to me. A lot of liquidity building up here with GBP CHF. A lot of retail sells in here. So there seems to be more and more evidence that the market could liquidate these highs. It's not screaming entries for me. It's not like effortless perspectives or anything like this. So it's all good. We love CHF over here. I'm happy for you. I just don't see setups often with these. So, okay, outside of that, guys, we'll wrap up here with the quick scan through the dollar pairs. And at the moment, I mean, we've seen some pretty decent volatility. Market liquidated this trend, these retail trends. I talked about this, I think it was yesterday or maybe last week. But money, we were waiting for money to come in here, right? And so it finally obliterates all of that. We did see price briefly breach this high. So it does clear these highs here and then come down. So we do see a nice little pump here. Maybe we have sells in the future. I'm not saying I'm going to sell. I'm saying maybe in the future, depending on how structured looks, could look for something there. So if the market were to give me lower lows and then, we just trade down here, whatever, then maybe in the future I can, look for sells or something like this. But again, I need more information. I need more data to confirm something like this. NZD USD, similar. You guys see that? Similar. Clears the highs, Comes crashing down. It would need the same situation, would have to go down. This is also the trade that we took last week. I believe I shared this on here. Actually, did I? Tuesday. No, I don't know if you guys did get this one. No, I don't think you did. That's okay. The community did. But on the YouTube stream, unfortunately, I don't think I was live early enough for that one. But we do see a pump up. Again, if we get lower lows, then we would wait for proper timing to take something like that. Euro USD, super bullish relative to GU, or relative to AU and NU. And then GBP USD also very bullish. I'm curious to see how price works its way down. It looks GU is giving me some bullish energy here. We're getting higher highs overall. Price crashes down before it rips. So I think we could get some possible buys here with GU. We had this push down during London session here. So the market clears these lows and then rallies. And this definitely does a good job, getting below previous buyers, retail buys. So we may see something here. I want to see if we can trade up here for a bit before we get something like this. There's a lot of dollar news throughout the week, so the market can reorganize itself pretty often. What's up, Chale? Africa in the house. But yeah, guys, we have dollar news again tomorrow, Australian news tomorrow. Then you have pre-New York session dollar news from Wednesday to Friday. So prepare for that, guys. Don't get lazy. Wake up early. Get the job done. Show up. Got to go hunt for your food, I don't even eat meat, but still, you got to go hunting. Got to go get it. Get after it. So for now, GU, maybe EU could see some decent buy setups. We shall wait and see. Outside of that, chilling. So let the market unfold. I'm sure some of these setups will look a little bit better as time goes on. USD JPY. Possible sells over here. This does a good old liquidity grab. This pops up. Goodbye retail sells. Liquidates those bad boys. Comes crashing down. We'll see. If price gets to USD JPY before price gets to GU, then I would hold off on UJ. I always want to trade the setup that gets to its zone last. It's just more likely to hold structure. UCAD from last week, it deep pullbacks and then ended up liquidating these retail buys like I talked about last week. So if you guys looked at USD CAD, had some deep retracements, played off of these imbalances, and then just did its thing. So just like we took GBP USD for buys last week here for 4R, 5R, depending on your situation, UCAD also played out pretty nicely. So yeah, guys, we'll wrap it up there. Good work. Keep plugging in. If you guys are, if you're struggling, then it might not even be your technicals. It might be other things. So make sure you're just aware of who you are as a trader. Be real about what's working, not working. If you're on the charts, if your analysis is good, but your trading account is not so much, then you know what to do there. But guys, I am at home for 3 weeks, so let's pray to God that I can make some content for you guys and put some more value over here. And yeah, appreciate you guys. So keep plugging in. I will see some of you bright and early for New York session. We got back-to-back sessions, 2 hours of New York session trading. And so I'll see you guys. Obviously, we do that Monday through Friday. And then if you guys want any extra tools, resources, just check the description. here. And wish you all the best. Stay disciplined and just don't fucking quit, all right?